You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Well, what do you do now? If you follow Susie Orman, she says, save, save, save. And one day when you're 72 years old, you'll be able to live off your savings and your Social Security. Well, the person you're about to hear from differs. And if you listen to her, well, her mother was following Susie Orman's advice. And then Caroline Yuki stepped in and said, Mom, don't listen to that. I got a better way. Her mother just turned 63, retired recently. Caroline, it's great to have you on the show. So what was the magic bullet that saved your mother 9 years of work?
Yes, thank you, Kerry, for having me on the show. So when we put together the finance numbers, because Susie's all about planning, figuring out how much you spend a month and planning that out, we realized that there was just not enough. And like working till 72 just was not an option. My mom works at the hospital medical lab and her hands were getting carpal tunnel and it just was not a good way to think. So then I started thinking about that whole concept of passive income, thinking about how people say you can invest in rental houses. And because we knew watching the stock market was not something that we were adverse with. So that was not an asset vehicle that we chose. So I started looking into real estate investing and to look into building passive income that way for my mother. So the plan was to build her an extra $4,000 a month in passive income. And so every year we invested in a house and flipped it into a rental property and basically put a tenant in there. And then fast forward 8 years, like we were able to build up a fund that she feels comfortable she can retire with and money won't run out. I think the scariest feeling with these financial advisors when they put together a retirement plan is they ask you, okay, how much do you see yourself, living off of when you retire? And, how old do you think you're going to live till? Like, that's not a question you really want to ask people, right?
Nobody knows the answer to that.
Yes.
Kind of absurd, isn't it? Well, I'm going to live to 150, but realistically, I'm probably not going to make it that long, am I?
No, it's not. And yes, and even if they put in 92, if I live past 92, should I be scared that I lived past my financial calculated age? It's just a really scary feeling. So what we did was basically think about more of how do you get recurring income rather than just trying to build a reserve to live off of.
Right.
And Kerry, I could also share with you, my background is in engineering. And when I worked in corporate, we would celebrate these engineers' retirement parties. And I'll never forget one of these really sweet engineers, Tom. He worked for 35 years. And I asked him, what is it like? And he said, Caroline, he said, I'll never forget the scariest moment in my life is talking to the financial advisor at Fidelity and asking them if I have money to retire. And there's this 25-year-old person who's punching numbers into the calculations and letting you know, like, okay, we forecast and see you'll have enough. But it's just knowing that even an engineer who's worked so many years, like he's also feeling unsure. And we're relying on this calculator who's just doing all these simulations to tell us whether we've got enough. That was also an aha moment to me, that there needs to be a better way. Like, we've worked so hard all this time to have to feel uncertainty during a retirement party.
That's such a great point. So, so there is a lot of uncertainty. There's a lot of uncertainty in the world with what's happening now. Obviously, your mom's done amazingly well. Anyone that bought real estate in the past 8 years since the last crash, which was 08 and 09, so in the last 13 years, has done incredibly well. Rents are going up, all these things. But what about the future? Is she going to buy more houses still? What are her plans?
Yes. So what I learned on this journey, getting involved with real estate, is that the cash flow, yes, that's great with the rental houses and all that, but at some point after the maintenance and property management, which I think property managers are gold, I realize trying to manage it on your own is just really a big task there. And really, the benefit comes down to the tax benefits is where the rental house property and the appreciation, like we invested it in good neighborhoods. So it definitely had a really good payback. And then during with COVID and all that going on, I know people are always worried, it's like, will the housing market, will stand and hold? And it's been good, everything all appreciated. And what I learned is economies of scale is very difficult with rental family houses.
Right.
So even though we have several rental properties, each house's layout is different, the appliances are different. Every time something needs fixed, we got to go source another fridge, another dishwasher. And I remember thinking like, wow, how do people who are full-time real estate investors do it? And then that's when I started learning about apartment buildings and commercial real estate and came to another aha moment in my real estate investing journey. This is how people do economies of scale. We see the pros and cons of rental house investing is the pros is you have full control. Basically, if you feel like selling the house, you can sell it right away versus, having investors involved. Everybody has to take a vote and agree. However, when it comes to apartment investing, you basically own a share of, a large portfolio of apartments and all that. The beauty of it is like there's just no work whatsoever. So I've started really enjoying the passive income side and help her start moving the funds into multifamily apartment investing as well. Because now that we've learned that we don't have to be that much in control anymore. Like we can trust people who are smarter, very capable of, handling all these apartments, and we'll just collect the paychecks. We're okay with that. So there's more economies of scale. So once we slowly sell off the rental houses, like we're going to basically help her reinvest them in apartment investings, and then she'll collect the passive income that way.
Okay. Well, that sounds like a very rational approach to things. If you were starting over again, before you got your mom into this, knowing what you know now, what would you do differently?
Don't just survive, thrive. The Financial Survival Network.
Torque Resources is an exploration company establishing a portfolio of premier copper gold early stage projects in Chile. Torque's management and technical teams have a strong track record of raising capital, discovery, and monetization of exploration successes. The company's Margarita Copper Gold project is located within the prolific coastal Cordillera Belt in Chile, which hosts some of the world's largest and most profitable copper mines. The Margarita project possesses excellent discovery potential for a major copper discovery due to the strength of the alteration system, large-scale magnetic targets, and the presence of copper oxide mineralization. Drilling is anticipated to begin in Q3 of this year. Torque trades in Canada under TORQ and on the OTC under TRBMF. To learn more, go to torqueresources.com. That's torqueresources.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Great question, Kerry. So this real estate journey has been a lot, like a huge roller coaster. Honestly, there's so many real estate investing related educational seminars, webinars out there. And I remember going from conference to conference, and you're meeting other real estate investing enthusiasts, and everyone's like you, really excited about building financial freedom for themselves or for their family. And I had signed up for an educational program, and they basically marketed, they're going to show you the system, hold your hand, show you every step of the way, show you how to get it done. And then I saw myself on a journey of learning how to look at foreclosures, how to do wholesales, how to do house flipping. And each of these seminars easily took like a month to attend all of them. They're in different cities. Right. And so I realized like I was just basically in this roulette of all these different real estate avenues. And it was difficult to keep focused because we were just having shiny object syndrome. Like everything sounds good. Every person you talk to has a story of a great foreclosure, a great wholesale, a great house flip. And then same thing. And then you could also talk to someone, they might have a disaster story of the same kind of business model. So I think the challenging thing was trying to figure out which business model really fits. And if I were to redo it again, Kerry, I think I would have tried to understand myself, like have more self-awareness of my business persona and how much involvement I wanted to have. Like, was I really one of those people who was going to roll up my sleeves and get out there on the dirt, talk to the contractor every day, go to site? Like, was house flipping really a flip for me? I later realized, like, not so much. Like, after flipping 2 houses, I was like, I don't see myself doing this full time. And then, like, just basically understanding yourself. How many hours do I really want to actively put into this? And then, is this something I want to do as a full-time career? And also understanding the why. I know a lot of people, when they set goals, they say the why is so important, but I think that's something that I did not dig deep enough when I first got into real estate, because the why was always building financial freedom. But financial freedom being the goal, there's so many different vehicles, avenues to get there. You can do paper assets, you could do real estate, you could start a business. And if all of these equally could get you there, like, which one would you choose? Like, should be the next question. So that being the goal, like financial freedom goal, I didn't know at the time there were opportunities to be a passive investor. I did not know at the time that you could basically participate, in these different real estate fund deals or syndication deals, and basically you can basically not actively, be involved that many hours a week. So I think if I were to redo it again, I would have spent more time, shadowing, being that boots on the ground and really making sure that that's something that I enjoy doing. And that before choosing that business model, because I could tell you, Kerry, like, I spent probably 6 months doing foreclosures, about 9 months doing wholesales, doing the phone calls, mailing the letters, doing the bandit signs. Like, it just felt like I was just chasing my tail for the full first 2 years. It was just a struggle to get up. Yes.
Understood. So somebody who's starting this out today, all right, obviously you've got your site. Just tell us what your website is again, please.
Sure. My site is boldmillionaire.com. It's great for people who want to invest in real estate, but do not want to be a landlord. So they basically want to invest capital and enjoy passive income and tax benefits without being the active landlord or getting involved with the house flip and everything.
So it's kind of like to get all the benefits of real estate investing without the burdens, but you are going to pay a price for this, right? Because you've got other mouths to feed on the food chain here. Everybody's got to get paid. And so in effect, you accept less of a return, or potentially less of a return, for less responsibilities, right? You're trading money for time, effectively.
Absolutely, Kerry. Yes, it's all opportunity costs. Everything is time, money, energy. And so, like, there's with, high risk comes high rewards. With the house flipping, there's a lot of time, energy that goes into it. And then there's the investors who say, like, hey, I want to be part of this 30%, of the deal, get a portion of the profit share. Do they, get as much big payout as the house flipper who did it all by themselves? No, but they also didn't spend their full time, managing it 12 hours a day too. So it's it's more of a decision. Like I said, you just kind of ask yourself, how many hours do you want to put into this?
Well, you know what else I like also about the passive concept, is when you're active, you diversify. You got 3 houses on the same block instead of 1. And if you go outside your area and you're not managing them, then, like you say, no economies of scale on single families. But when you go passive and you actually, you can buy different projects in different parts of the country, and you can get more bang for the buck, if you will.
Yes, absolutely. Like I was totally blown away when I first invested in these commercial real estate syndication deals. Like, they would be at work either at a shopping center or an apartment building, and then I'm getting updates on it and what's going on. But yeah, I did not have to regularly go visit it. unlike when I was a landlord, you're always concerned, is tenant taking care of your property? Is, how is the tenant, like basically how are they going to leave the condition of the place when they leave and all that. Now the downside of passive investing would be because it is passive, you are with a group, so you cannot just make the decision out of the whim, before COVID, it's like, okay, I think I'm out, let's just sell, because it is like a huge, group decision. So that's where I say, if you want to have control, like rental family homes, like that's why people buy, single family, and they want a little bit more economy schools. They'll probably buy a 6-plex, 8-plex. But if you're okay with not having complete control over everything, that's when investing in the commercial real estate funds or the commercial real estate syndications makes sense. And then REITs they're public, but the returns are not that great. Basically, you end up paying a premium, for REIT real estate investment trust returns, and we don't get the tax benefit write-off. And for that reason, I prefer, the commercial real estate syndications or the funds, mainly for the tax write-offs.
Syndications are usually a limited partnership interest, correct?
Yes. As housing limited partnership. And then
one thing you always have to remember, as they taught me in law school, there is nothing as limited in life as a limited partner, right?
Yes, you're segregated from all the risks. So like you said, you get, probably the people who are, in it solely that don't have that full protection, they also reap more rewards. But being a limited partner, you're shielded from all that risk. So you do get, a healthy, good 10% return versus the person managing deal who's putting his name to the, the whole loan and everything. Maybe they get like higher than that return and all that, but they're also taking more risk. So that's goes back to the risk and reward and the opportunity costs. But you're completely right.
You get benefits, the ability to diversify, the ability to not get calls from tenants that the toilet is clogged and get over here now, or somebody broke in, or, any myriad of tenant complaints. And, but then on the other hand, you're paying for the privilege. And for many of you, that could very well be worth it. Hey, Caroline, just tell us again. So the site that we should go to is boldmillionaire.com, and any other way of connecting with you on the web?
Sure. Yeah. So boldmillionaire.com, that gives you like a free download of what, the benefits of passive income, investing with the commercial real estate syndication, and also those who are interested, just to get rolling on an advanced personal finance side. I also have a free download on carolineyuki.com that basically shares the 8, habits of wealthy people. It's called the Bold Millionaire Steps, and it goes through everything from asset protection, improving your credit score, start thinking like a bank, not a lender, and basically getting their financial game plan into place.
Absolutely. And one thing that I've come into contact lately with is the use of trust, which can greatly reduce your tax liability, also make you judgment proof, which, believe me, as a creditor's rights attorney, I know a little bit about, retired now. And of course, for estate succession planning, all those things in one. Trusts are great to manage your investments. In any event, if you got a question for Caroline, shoot me an email, kl@kerrylutz.com. You'll see the links to her site on financialsurvivalnetwork.com. And while you're there, why don't you subscribe for the newsletter? Caroline, been a pleasure. Thanks so much for stopping by.
Thank you for having me, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.